We are talking about incorporated businesses. And as a CPA or chartered professional accountant, I'm often asked by new business owners, can't I just do my own taxes? In this video, I'm going to help you decide if hiring a chartered professional accountant is worth it. Filing your personal income tax return yourself has become a point of pride among many savvy Canadians. When I mention at cocktail parties that I'm a CPA, I often hear, I filed my taxes myself. The software I use is great. And fair enough, I think this is fine if you're an employee, don't have commission, don't drive for work, haven't moved, don't own a rental property, don't own a small business, don't have investments outside of an RSP or TFSA, and don't have tuition to claim. But the adage, you don't know what you don't know, is so true with personal income taxes, and corporate income taxes are a whole other ballgame. The argument, I didn't know, isn't gonna fly with the CRA. They'll happily hear your explanation and then apply the taxes along with penalties, interest, and potential negligence charges. The big mistake. The big mistake I see clients make when filing their corporate income tax return themselves is missing the balance sheet. A personal income tax return for sole proprietorships is mainly concerned with the income statement, which is what most business owners are familiar with. Revenue is along the top, with expenses in the middle, and net profit at the bottom, which is what is taxed. Simple enough. But with corporate income taxes, the balance sheet plays a significant role in the calculation of both your corporate and personal income taxes. The balance sheet tracks things like the ins and outs of your company bank account, who owes you money, what assets are owned by the business, and the loan balances that you owe to others. These things are so important for corporate taxes that I often spend up to 80% of file time just reviewing these amounts. Because of their importance, they are also a super common area to audit, and not understanding the flows between the income statement and balance sheet can land clients in hot water with the CRA. You really want a CPA? Let's go through a few examples. A client will call Josh had unknowingly chosen a non-designated accountant to help him with his corporate taxes. This meant the accountant filing Josh's return wasn't a certified chartered professional accountant. Josh didn't understand the significance, only understanding that the individual was an accountant. After several years of unreturned phone calls, late filings, and lots of yelling, Josh sought out a CPA. This is when Josh discovered that his non-designated accountant had issued dividends to his family members who were not shareholders of his corporation. This meant none of these dividends were valid. Not only was this disturbing, but it caused huge headaches, unexpected taxes, and lots of stress, along with extra fees to fix everything up. A second client, will call Mary, decided to prepare her own corporate tax return herself for a few years when getting her business off the ground. As her business grew, Mary turned to a CPA for assistance. This is when it was brought to her attention that she had recorded multiple vehicles on the balance sheet. However, the ownership had never been formally transferred. Now, coincidentally, Mary was also going through an audit, and the CRA picked up on the error. This cost Mary thousands of dollars in back taxes and penalties because the vehicle claims were denied. As you can imagine, this was a nasty surprise. So these client experiences sucked. They caused extra stress, frustration, sleepless nights, and more taxes along with accounting fees. Why CPAs are worth it. To become a chartered professional accountant, you need 6 to 7 years of schooling, many approved training hours, and you need to pass a 3-day exam. I can confirm it's a little grueling. The education requirements are rigorous to ensure that only individuals of character and sufficient knowledge become certified. What these requirements do is protect the public. It's why CPAs are expensive, and non-designated accountants, along with doing it yourself, can often result in nasty surprises. CPAs help protect you from unexpected tax bills, unnecessary audits, and horrendous mistakes on a year-by-year basis. Over time, a CPA's services can pay for themselves. I hope this video has helped you see the value in a chartered professional accountant. That's all I have for today. Bye for now.